Well, today we were in conversation with Sandeep Tandon. He's of Quant Mutual Fund, and here is his outlook in general for the equity markets. Just to put it into perspective, Quant has their themes where they're generally bullish on banks. That's one of their top themes to play. IT is a bit of an avoid. In terms of the Quant tax plan, the top three holdings there include Adani Enterprises, Vedanta, as well as Ruchi Soya. When it comes to the Quant Mid-Cap Fund, the top three holdings over there include Indian Hotels, Ruchi Soya, as well as Tata Communications. They're also of the view that as of now, the market indicators are pricing in extreme risk. In fact, Sandeep Tandon, when he spoke to us today, did say that there remains a lot of pessimism in the markets, and that's what we're witnessing across the globe. But that to a certain extent does seem to be peaking out. He did say that as of now, the currency market seems to be showing signs of exhaustion, as well as the crypto markets are seeing signs of exhaustion right now. He also went on to say that we are seeing a lot of fear in the equity markets from investors, but despite that, he says that investors are not hedging their positions. In fact, he believes that he's going to call it a reflex rally. That seems to be on the cards as of now. So for the long term, when it comes to the market outlook, he continues to remain extremely bearish looking at the overall macro picture, and he believes that the biggest risk for India still remains elevated crude oil prices. Commodity prices across the board may have come off, but crude oil prices, they haven't peaked, and that continues to remain a concern. He said not for the global markets, but more so for India. In terms of concerns related to inflation, while they are being addressed by the US Federal Reserve, for instance, with their 75 basis points rate hike and the fact that they're going to continue with rate hikes down the line, he says that concerns related to inflation could maybe abate by the month of August. It's toward the fag end of the year that he's expecting a massive global rally as he sees inflation concerns reduce, and this reflex rally he believes will be driven maybe by beaten down metal sector as well as IT. He's very constructive on the metal sector. He believes that valuations over there as well look very reasonable, whereas when it comes to IT, it could be just a mere bounce because valuations are expensive and one should really prune their positions over here. They've recently increased their exposure to energy, capital goods, and even select auto stocks, and they remain very top-down and macro in their outlook for the market, saying that it's a very long-term strategy. Tata Telecom continues to remain a part of their portfolio. They remain very constructive on the telecom space as well for the long haul. In terms of another theme that they look at, it's the reopen trade or the reopen again trade, and within this space, they continue to remain bullish on IHCL or Indian Hotels. They had bought ITC when it was the stock that everyone was hating on, so they continue to remain very invested. It's one of their core holdings, one of the largest holdings in ITC, and continue to like the business, not just FMCG, but in fact all the business segments.